In this video, I'm going to be going over some extremely terrible moves I've seen people making in the market. And I just kind of wanted to mention this because I don't want you guys to make the same mistakes as I've seen a lot of people making. As you could see, actually, before I get into that, I started this portfolio a couple days ago. I invested about $1,000, exactly $1,000, in kind of before the market crashed. As you could see, I bought five different stocks here. Apple kind of snuck in here because I couldn't pass up on a share of Apple at $202. But Amazon, Google, Uber, and Walmart are all companies I really wanted to buy at good value. I imagine these are going to burn a lot more than they already did. But I bought them now just to show you guys how I'm going to start building this portfolio. Uber is a company that I'm going to be very bullish on throughout this downturn. Uber, I really want to pick up shares for as cheap as possible. Amazon as well. I think that Uber and Amazon, when the market rebounds, are going to be huge winners here. Google is an extremely good value play right now, which is why I picked up Google. And Walmart, I thought would be interesting to see kind of a staple stock, consumer staple stock in this portfolio. Because I imagine it's going to fall, especially with these tariffs. But I wouldn't mind picking up Walmart at a lower price as well. And once again, I'm not bullish on Apple or anything. I just at $202, I was like, I might as well, right? So now let's get into what I kind of wanted to make this video on. So I'm just gonna slide over here. A good stock, a stock that I'm definitely going to put in that portfolio. A good example is Eli Lilly. This is a stock that people were willing to pay 70 PE for, but it was justified. Like, Eli Lilly grows immensely. In terms of their services, Eli Lilly is a stock that you absolutely should pay a high premium for. As you could see, I mean, the PE is still 63. If this falls to 30, I will buy so much of this stock you cannot even imagine. You guys really don't understand. I mean, of course, some of you do, but a lot of you really don't understand what actual value is. And I'm going to be jumping in to this stock right here, AMD. I really can't believe that people are willing to pick up this stock right now. If the market truly experiences a bad downturn, stocks with 85 PE, tech stocks with 85 PE, 100 PE, Palantir's at like 400 PE, those stocks are going to get murdered. And people are just buying these stocks like they're buying a dip. You really have to evaluate more carefully what companies are actual true value. And another example I'm going to be giving is Nike. I really don't understand why people want to pick up so many shares of Nike. And now I know a lot of you guys might like Nike because it's relative, it's a good company. They, as you could see, fell off an extremely large cliff, I'll say. But at the same time, you have to really think what Nike actually sells. They sell apparel, they sponsor different teams, they do such a wide range of things, but at the same time, I don't see Nike really growing immensely. I mean, I think that, if I had to guess, they peaked in terms of, popularity in the early 2000s. Now, the stock right now is sitting at a PE of 19, but are you really willing to pay more than average PE for a company like Nike? Do you truly see immense growth potential? What I'd say about Nike right now is that it's at a very fair price, okay? Like, 19 is a price that I would absolutely pay for Nike, but I'm not that excited about Nike's future outlook. I don't doubt that they're going to be strong in the future, but to say that this is a strong buy for me is a little bit of it's something that I just don't really understand. A company like Amazon, for example, 30 PE. People are willing to pay a premium for Amazon because it's freaking Amazon, right? And if this PE falls to maybe 20, absolutely, extremely strong buy. Nvidia, man, if this thing falls, to a PE of 20, extremely strong buy. I mean, right now it's a bit risky because it is a tech stock and it is an AI stock, and I think a lot of the hype is going to fall out. But I just hope you guys truly evaluate. Don't just look at stocks that people claim are value. Well, because they might be. But at the same time, if somebody or if another company does what they do and better or at a faster growth rate, I don't really see why people are thinking that this is the opportunity of a lifetime. I mean, I don't doubt that Nike is eventually going to climb, but not aggressively. And it's going to be like PayPal. It's going to get the PayPal treatment in which it peaks and then flattens for a long time until they really start to impress on earnings. So if you are going to buy this dip, please buy stocks that actually are going to be pushed into a fair PE ratio. Don't buy stocks that are just so happen to have fallen, because this fall from 70 to about 80 was not for no reason. All right, don't think that you're just getting a good price. But remember, it fell from 170 to 80 without any tariff action, without anything like that going on. I mean, I'll give you even another example, like Meta stock. Let's see, Meta Platforms. Man, this thing, I swear, if this thing falls substantially, I will be all over this thing. You really just have to look for those deals. Anyway, that's pretty much all I'm going to say about that. If you guys do want to follow this portfolio, I will be consistently investing into it and updating you guys to see what happens. These picks are a bit boring right now. I will get into some, more risky plays, I'd say, but at the moment, I think that buying established companies at a discount is the move if you do want to invest in this current environment, which I would absolutely recommend. These stocks may go a lot lower, but at the same time, you have to be willing to invest in environments that are not quite friendly enough to, make you money. Anyway, I hope you guys enjoyed, and I will see you in the next video, and have yourself a wonderful day.